Good evening, traders. So it's just gone 10:30 on the 18th, Sunday the 18th of November. So obviously the markets have literally just opened. Now I thought I'd give you my video breakdown early this week in preparation for the week ahead. Doing it on Sunday night as opposed to Monday morning, for one, because I'm busy on Monday, but two, because I'm just so excited about what's going on in the markets at the moment, and thought it'd be good for you guys to be updated and ready for that as we head into this week. We had quite a crazy week last week. A lot of movement, a lot of volatility in the market, the dollar finally retracing. But yeah, I'll just talk you through what I'm seeing in the markets this week. So to start, as always, on Aussie dollar. This last week we saw bullish price action, which took us straight through that 0.7250 major resistance. The prior week we did have this shooting star candle, which rejected the simple moving average, as well as that level. So we were expecting to see a pullback towards the downside. We did see price move downside a small extent. However, the moving average, the exponential moving average, supported price action and actually pushed price much higher. And now you can see I've highlighted this as breaking this previous high down here. So overall, now we are back above the moving averages and this level of key resistance, which is now turned to support actually. I am looking at further upside on Aussie. Now if you've been following my analysis, you will know that after this candlestick and even back here, I was anticipating upside. However, I did expect last week to pull down slightly further than it did before heading higher. So this week we've got the potential to come back down and retest these moving averages as they cross over to the upside. But overall, I'm looking at this 0.7450 weekly level. If we take a look on the daily time frame, so as you can see, we came down, made this higher low. I was looking for price to come back down and retest this zone here, the 0.7150. We came 15 pips shy of that level and reversed. Once we broke through the 0.7250 major resistance, which again is now turned to support, came back, retested that on Friday, but again found support on the exponential moving average. We broke through the 0.7300 towards this 0.7360 zone. Today, at the market open, we have gapped down considerably. So we could be seeing the market pull back potentially as far as this 0.7250 level to then head higher. If we try and get a Fibonacci on here, then, well, initially we would have been looking at something like this, which if we put some levels in here, you can see that we haven't yet fulfilled this extension. So we are looking at heading towards this 0.7360, but then at the same time, if we extend that up here to this most recent low here, that we could be pulling back to this major resistance first. So one way or the other, could see the 0.7360 before a pullback and then to head higher, or alternatively we could see the pullback first to then explode higher. But overall we are looking bullish here on Aussie. So from the daily, I'm going to step down straight to the 4-hourly time frame, and as you can see, we had these long upside wicks last week, which is suggesting we were rejecting the 0.7300. However, price failed to convincingly break through the 0.7250 support and also the exponential moving average. So following a final retest on Friday, we did head higher with heavy bullish strength. Now we have had this, what looks to be an evening star formation, as price returns to attempt to retest this exponential moving average. So currently, while we remain above this 0.7300, I am looking at further upside to fulfill this 0.7360 level. Now onto USDJPY. So we were looking at breaking this 113.75 weekly resistance in line with previous highs. However, after a bullish start to the week, price was quickly whipped back down with a bit of a dodgy dollar, and we're now sitting right on that exponential moving average support, which is also in line with that weekly uptrend. So highlighted here, you can see that we have actually failed to break the previous high, and normally after the third bounce of a trend line, you would expect an explosion higher. So this does suggest that we could be seeing a trend reversal, and this week could be seeing price break through this uptrend. However, we can't forget that we are in an overall uptrend, and price is currently sitting on the exponential moving average, which will provide support for price. So we could be looking at one final test of the 113.75, or we could still be looking to push higher towards 115.70 and even towards our monthly resistance at 117. However, that's more long term. Short term, we could be seeing price return to this 61.8 this week. If we take a look at the daily time frame, here you can see that bullish leg which we had, but price really did struggle at this 114.10 level, as I did specify in my analysis, and we pulled back from there, broke through the exponential moving average, and after some hesitation we absolutely smashed through all of these levels of support, the dynamic area of the moving averages, as well as that all important 113 level. I mean, it's only a daily support zone. However, if you have been following my analysis, you will know how price has been responding to this level, and you can see back here. So again, we did have that bearish close. However, we have closed just on that uptrend, and this week hasn't really gapped up or down, opened pretty much flat. I do expect to see price attempt the upside, potentially to retest the moving averages as they cross over to the downside. 112 is my initial downside target for USDJPY. Now take straight down to the 4-hourly time frame, and we were trending, ranging in this consolidation zone above the 113.75 support. Price broke through the exponential moving average towards a 113 level, was quickly whipped back up, but failed at a retest of this range. Price has now continued lower, and we have actually formed a new low at the 61.8. So quite an interesting setup here, as we have just approached this refined Fibonacci zone, which would lead us to think that price is heading higher. However, while we remain trending down, I'll need further confirmation that we are going to head higher. For now, as I say, I can see price attempting to push lower. So I did say 112 4-hourly time frame. If we did see that 112 level met, then we could actually be heading even lower than that and initiating a new trend towards a downside. For now, I expect price to potentially retest this 113 level before attempting to head slightly lower. Onto USDCAD. So on the weekly time frame, we had that bullish push above the moving averages, and after momentum attempted to continue into last week, we failed at the 1.3250 weekly resistance to close bearish last week, and that is actually a rejection of the upper region of our consolidation range, as seen here. So although the moving averages have crossed over to the upside, we could be seeing price return to 1.3 monthly support yet again. We did have this downtrend here. I don't want you to forget about this. We had that like that. I don't want you to forget about that, but I just removed it to make things a little bit more clear. So we are approaching a retest of that, which pretty much lines up with the exponential moving average. So I'll be watching price around this region this week. If we reject that, then we could easily be heading past the 1.3250. But taking into account the potential for a weakening dollar, we could easily be seeing that broken, that exponential moving average broken, to hit that 1.3 major support once more. If you take a look how that looks on the monthly, again, we can easily see that we've had all of this rejection, all of this sensitivity to the upside from this region, and price is definitely consolidating within this range. We may not have seen the last of the consolidation for this pair as we attempt to tap the moving averages once more. So if I take it down to the daily time frame, you can see that the rejection from this weekly resistance, that's 1, 2, 3, 4 consecutive candlesticks before breaking through the moving averages, as well as the 1.3165 daily support. Price has gapped up slightly with the market open today. However, we are still bearish for now. We can see that we are trending upside, upwards, with price forming higher highs and higher lows. So we could see this as a higher low. However, as I said, from the weekly time frame, this is right at the top of this range, so we could be seeing price drop to the 1.3100 first, which is here, which would still allow us to pull back upside and attempt to break these highs within this overall uptrend. So I think the 1.3100 is a good downside target, but we'll wait to see how price responds there. Onto the 4-hour time frame. Now we can see the range that we had at the 1.3250 weekly resistance was broken in line with the moving average crossover. Beautiful setup there to just fall bearish to the 1.3165 level, broke through that as we look as though bearish momentum is continuing. Then at the end of the last week we saw a bit of hesitation, slight gap up this week as we attempt to retest this 1.3165 level, but as I say, we can easily come down lower this week. Finally onto GBPUSD, and as we know, the pound's been all over the place with Brexit negotiations ongoing. Last week was a bit of a roller coaster week. Took a couple of trades myself, and to say the least, they were a roller coaster ride. However, I did manage to come out of that unscathed in profit. So if I take you through this, we had a big upside spike. However, this turned out to be a rejection of the 1.3 major resistance level in line with the moving averages, and after closing bearish we have a confirmed evening star formation here. So I am looking at further downside on this pair. Again, if you've been following my analysis, you'll know that I do have a scenario which sees pound heading all the way down to 1.2500 major support. Obviously that's more long term. Well, I say long term, given the current uncertainty, we could be seeing that sooner than expected. So with the EU summit set to take place on the 25th, and anything could be in store for the pound right now. Take a look on the daily time frame. So the fundamentals pretty much line up perfectly with our technical analysis here. We had this downside Fibonacci. This was the last week of fundamentals and news regarding Brexit, which caused all of this volatility. Saw price spike back to that refined zone, rejected that, and then this candle here on Thursday was when Dominic Raab resigned, which sent pound tumbling. This was over 215 pips in one day, back below the moving averages, which have now crossed back to the downside, back below the 1.2845 daily support, I should say now. Oh sorry, it was support, now turned to resistance, and we just about found support on the 1.2750 weekly level. So as you can see, this was an overall lower high to this back here in mid-October, and we're now looking for price to break through the low at the end of October to head towards our Fibonacci extension at 1.2550 before the 1.2500 major support level. Price gapped up to the 1.2845 daily resistance level, but we could potentially see this market push just to retest that moving average once more. Overall though, as I say, I am bearish here, looking for price to immediately retest the 1.2750. If we see how this looks on the 4-hour time frame, you can see we continue in this trend of lower highs and lower lows. This could be a lower high, however we're unconfirmed yet as we remain above this exponential moving average. price just squeezed between this support and resistance now. So we could see a push slightly higher. If we draw a fib on here, look something like this, then we can see that price responded to the 50% level. However, we could be seeing price come back up to this 1.2950 region before heading lower. The moving averages potentially attempt to retest the upside before crashing lower. So obviously, as always, I'll keep you guys updated. Follow my analysis over on the website, over on social media, and of course the Telegram, and I'll be back for your midweek breakdown. Trade safe, guys, and hope you all have a good week ahead.